Hey guys, hope you are all having a great day so far. We're gonna keep today's video super short and basic, just like my ex. First and foremost, let's talk about yesterday's market drop. Tons of people have been wondering why the stock market took such a dip out of nowhere. It wasn't like news came out or something. Well, the thing is, news sort of came out, but not in the way people expected. Record highs in the stock market over the past few weeks have coincided with a sharp rise in investor enthusiasm towards stocks, according to various sentiment measures. That enthusiasm could serve as a warning sign that stocks may be hitting their limits to the upside, at least in the short term, as various sentiment indicators hit extreme levels. Recent data from the Conference Board showed that consumers feel the most bullish towards the stock market than they have since July 20, 21. When stocks were on a tear during a period of intense speculation thanks to government stimulus checks and 0% interest rates. Bullishness has gotten a bit excessive of late, with market veteran Ed Yardeni signaling that investors are buying more upside calls than they are buying downside puts. This can be viewed as a contrarian signal that investors are getting too bulled up towards stock prices, and that a short-term correction could be imminent to rein in the excessive optimism. Simply put, the stock rally that we have been enjoying went too far, too fast, and because of that, we saw major indexes post their biggest drop in months, a welcome development to bulls looking for a pause to refresh a stretched market. It was a pretty steep fall, fellas, but we made absolute bank. I had a put alert that went active in the latter part of the day yesterday, check it out here, and we banked. Look at the server performance, it was like MOS. If you haven't already, fellas, hurry up and join my Discord already. It's free for everyone, you just need to click the invite link in the comment section. I kid you not, we have been on a roll this week. We got all the educational material you need, including technical and fundamental analysis books for you to download, as well as guides on how to trade effectively. We have day trade alerts, weekly alerts, and long-term investing suggestions as well, a community that has it all, and it's for free right there for you at the click of a link. Come in and join us already. Now on to the next part, which is an interesting article published by The Street. Titled, "Why a Bet on GameStop Stock is a Bet on Ryan Cohen." It goes on to explain why investing in GameStop means betting on Ryan Cohen, who is putting his skin in the game, and questions if Cohen on the verge of transforming the video game retailer into a holding company. We are going to go through that article right now, so I want to credit Bernard Zambonin for writing this at The Street. Big shout out for not angling this out to be negative press. He starts out by talking about how in mid-2020, before the meme stock frenzy began, activist investor and former Chewy Ryan Cohen purchased a substantial chunk of GameStop shares. Cohen's ownership steadily increased until he eventually became the company's largest individual shareholder through his holding company, RC Ventures. Cohen initiated internal modifications after assuming the role of GameStop's board chairman, with a vision to overhaul the company's business strategy. As per corporate records, the first stage of GameStop's metamorphosis occurred in 2021 and extended into the first half of 2022. This phase was marked by a concentrated effort from the management to revitalize the deteriorating infrastructure and enhance the company's unique selling proposition. Consequently, GameStop invested in enterprise systems, technological competencies, store leadership and personnel, and diversified its product range and services. In the second half of 2022, GameStop embarked on a fresh stage of its transformation, prioritizing three key objectives: the establishment of top-tier omni-channel retail, profitability, and capitalizing on its brand reputation to foster growth. In September 2023, Ryan Cohen took over as CEO of GameStop, succeeding Matt Furlong, who had a 2-year tenure. Cohen has been implementing a cost containment strategy that has already started showing positive results. By the end of the third quarter 2023, GameStop's net loss was reduced to $3.1 million, a substantial improvement from the $95 million loss in the same period in 2022. The company's selling, general, and administrative expenses for the third quarter were $296.5 million, a decrease from $387.9 million in the same period the previous year. Cohen is a firm believer in the saying, "Put your money where your mouth is." He consistently emphasizes that company executives should be personally accountable for their actions and invested in the company's future success. In a public speech at a GME shareholder meeting, Cohen criticized Wall Street executives, suggesting they often behave like robots seeking only to rest and vest. He also pointed out the issue of overpaid executives making suboptimal capital allocation decisions. The departures of former CEO Matt Furlong and former CFOs Mike Recupero and Diana Sada-Jajeh might have been influenced by the company's policies regarding GameStop share ownership, a policy implemented by Cohen. As stated in GameStop's proxy statement, the company enforces an equity ownership policy that requires each executive officer and non-employee director to maintain common stock ownership with a value of at least 5 times their base salary, 3 times their base salary for the COO and EVP, and $275,000 for non-employee directors. New executives and directors are given a 5-year period to fully comply with these requirements. When Cohen's appointment as CEO was announced, it was revealed that his salary would be $0. This development was not unexpected as Cohen has declined any form of remuneration during his recent years as an executive at GameStop. In June 2023, Cohen augmented his GameStop stake by an additional $10 million. Simultaneously, a few other GameStop directors also acquired more shares. It's often said that insiders have numerous reasons to sell but only one to buy. Those acquainted with the company are likely to have a good understanding of its future prospects. As revealed in its third quarter 2023 earnings report, GameStop has revised its investment policy. Previously limited to investing in fixed income assets with the company's cash reserves, GameStop is now permitted to invest in financial equities, such as stocks. This new policy also authorizes CEO Ryan Cohen to oversee the company's investment activities in both public and private markets. This shift indicates that GameStop is likely transitioning towards becoming a holding company, particularly given its strong balance sheet with approximately $1 billion in cash. GameStop has encountered difficulties in revenue growth over the past few years in a fiercely competitive market, compounded by the clear disadvantage due to the digitization of games. Cohen successfully evolved Chewy from a startup into a company worth billions. He has also dedicated a substantial part of his portfolio to an investment in Apple and recently purchased shares of retail companies such as Bed Bath & Beyond, which he has since divested, Chinese e-commerce behemoth Alibaba, and department store chain Nordstrom. In a rare interview last year, Cohen expressed his affinity for retail companies. Given his recent investments, this trend is expected to persist in the future. I think this potential transition will open a ton of doors and opportunities for GameStop in the future, but as I have said before, I am waiting to hear more from GameStop themselves as to what the next step will be going forward. Let me know your thoughts and comments down below, and if you haven't already, come and join our Discord. Fellas, it is not hyperbole when I tell you that you will end up benefiting a lot from being there. Even if you don't day trade, the vast wealth of content will surely benefit you. The community continues to grow rapidly, and there's no reason you should skip out on it. Come say hi and see for yourself. With that said, hope to see you guys on the next one, To the Moon.
Thinks that there was collusion, that the big guys, all of you guys, were figuring out how to do this and ultimately come out ahead as you always do. But did you talk to them about restricting or doing anything to prevent people from buying, not selling, but buying in GameStop? Anybody in your organization?
Let me be perfectly clear. Absolutely not.
So if we depose everyone in your organization, we will find that.
That is correct.
Okay, thank you.
Passive investing is actually rooted in the theory that markets are efficient, and that markets are efficient because of active managers setting the prices of securities. Firms like Citadel, that markets are efficient because of active managers setting the prices of securities. Firms like Citadel, firms like Fidelity, firms like Viking Global, Capital Research. We're all running large teams of people that are engaged in fundamental research, trying to drive the value of companies towards where we think they should be valued. Trying to drive the value of companies towards where we think they should be valued. And passive investing, in a sense, enjoys the market efficiency that we create in our work each and every day. Passive investing.
I talk to them about being like a group of junkies who've relapsed, going, listen, man, I just need some liquidity, you know what I'm saying? I just ran into some bad subprime, you know? We just had complex formulas. We just didn't factor in greed and panic, you know? I just need $805 billion by Tuesday. Yeah, no, seriously. No, I would not screw you again. It's pretty crazy.
I've learned my lesson.
No, baby, this is not like the other time. No, seriously, just throw me a bed here, baby.
Just give me,
help me out.
Just give me a little bit.
Yeah, just a taste. That's all I need is a taste. I need $2.5 trillion. I'll pay you back.
Get me through 1 week.
Yeah, it's like
One week.
they're going to print out a new $20 bill. The new Geithner $20 bill will be, instead of "In God We Trust," it'll just say "Trust Me," and it'll be the little man from Monopoly going like this.